episode. Just to introduce, we're gonna do this one a little bit differently than we usually do for our regular viewers. Usually we have the news section at the start. We're not gonna do that today. We're gonna get right into the juicy parts with the interview with Hildeby. So, first, let me introduce the show. Market caps, where funds and firms provide their insight on their activities, sector, and the markets at large to you, our audience of institutional investors and traders, as well as industry professionals. I'm your host and moderator, Stefano, Director Institutional Services at Alea Research. And with me, I have Darren, our analyst and panel contributor. And we're joined by Hildeby, Head of Data at Dragonfly. And we just want to say that any views expressed by Hildeby will be his own views and not by the firm. Hildeby, welcome, man. I've been wanting to
Hello,
have you
everyone.
for a long time. It's good to finally have you here.
Well, yeah, thanks for having me. I'm very glad to be here.
Absolutely, man. Let's get into it. I was curious first. Tell us a little bit more about what a head of data at a VC like Dragonfly does, and also how that ties into the larger picture of what they do, right?
So my job is threefold, I'd say. The first one being I'll help on due diligence process whenever there's data to look into.
Mhm.
The second one being once we have invested in certain companies, I'll help them out on their data needs, and that can be very wide, reviewing pipelines, making data set, reaching to get data set for them, certain dashboards, whether private, whether some are public. There's all kinds of things. And then the other side of my job, the third one, which is what I'm more people are probably more familiar with my work for, is the public goods that I publish across Dune and Twitter.
Yeah.
And yeah, I try to showcase data that isn't currently surfaced so that it is accessible and people can have conversations actually backed by data rather than opinions
Yeah.
when possible.
Yeah. That I mean, that's always great. That's what we do as well. So aligned there. Um, I'm gonna guess that's also aligned with Dragonfly, right? And it helps with their brand building, I suppose, to have someone like you out there and basically spreading and disseminating that objective information.
Yeah.
Um,
So to I,
yeah,
I I originally joined Dragonfly after having published some public goods, and that was the basis from which I got in touch with them because they also want that. It's good brand building as well, and it comes back to Dragonfly in good ways.
yeah, I think that was a magical time, like early Dune days. People building dashboards and getting known for that, and a lot of people got hired off of the good work they did back
Yeah.
then. Yeah, those were magical times. Another question was kind of going off the cuff here. You mentioned the different areas you focus on. Is it is it ever more forward looking? Like, say, Dragonfly wants to get into I don't know, some area that they're not currently into. That might be hard because you guys, I think, cover everything pretty widely. But for sake of argument, might you also then start doing some digging, start gathering some data so that they can start having some informed high level decisions about a sector that might be coming up?
I not really because I tend to focus on data that will be the highest impact possible, and that tends to be in established sectors. Let's call it that way.
Mm,
Um, and yeah, because that's where I'll have I'll be the most productive in terms of what I put my time into. I want it to be as high. I have it as high of an impact as possible. And yes, so I'm not necessarily looking all the time at new sectors, and also those new sectors tend to have no data at first. They actually tend to, be people talking to partners, but things may not be live. So it actually the conversation starts way earlier than the protocols being live, right?
yeah.
Um, so yeah, but I do try to surface and look at trends into existing sectors, and we do look into investments that way.
Got it. That actually makes a lot of sense. Yeah, emerging sectors might not have data available. So, okay, yeah, that tracks. Talking a little bit more about venture capital, right? Just to start at a high level for our viewers, like, can you walk us through the venture capital life cycle from seed and maybe even pre-seed actually to all the way to an exit? Like, how does that work? What's the typical flow like? Um, yeah, what does that look like?
There's a lot of misunderstanding if you look on crypto Twitter and stuff, because people are going to invest in very different styles. And most of crypto Twitter is going to be looking at short-term investments. When you look at investments, they're not looking 5 years out. Very
Mhm.
rarely they are. But that is actually what venture capitalists do. Uh, you look at a long time frame, and therefore you do, of course, you may get better deals than you would on the open market, but you also
Sure.
take higher risk because you have to hold those positions for a lot longer. So and if you look at the life cycle of many protocols and many things in crypto, 5 years is a long time. It's a really long time. So it's a very different investment strategy that I think people misunderstand. And yeah, I don't know. I think it's a lot of things on crypto Twitter getting angry at each other's stem from that as well.
Yeah, for sure. That's a common theme, I think, with a lot of the guests we talk about, like market makers are a good example. There's so much misunderstanding and usually just a lack of being informed, which I tend to see that as soon as people don't understand something, they tend to like fear it. They tend to assume all the worst things, you know. So it's yeah, a bit of psychology there. It's funny how that happens, but the same could be said for VCs. That's very true. Um, you touched on something specific. You said 5 years is a long time in crypto. It surely is. It's more than a full cycle. I have two follow up questions on that. The first one is a bit more personal about, yeah, maybe touching back on that point about how you started as a Dune wizard and entering the space. I believe you were even like in college back then, if I remember correctly from our personal talks. Um,
Yes.
now, I don't know how many years in actually, but maybe something like a full cycle, maybe even more. How
Well, I
have
have
you? Yeah, yeah. Go ahead. Like, how long have you been
not yet a VC investment life cycle. So
here?
uh, I started in well, the thing is, I started at first very light, so it's not necessarily the same thing as when you go, deeper into it. I think in 2021, I took the leap and stopped my master's degree to
Right.
because I already had some traction on Dune, and people were reaching out for certain paid pieces of work, and I thought that could, if I went all into this, I could go somewhere. And that, yeah, I want to say February 2022 is when I took the leap, and
Okay.
then I joined Dragonfly like 4 months after that. But I actually started using Dune, during the whole COVID period. So I was stuck at home. I had my university, my master's, as well as a job on the side. That wasn't as exciting. I was working in, it's essentially the same job, but in the dairy industry, which I find extremely underwhelming.
Yeah.
But to each their own opinion. Uh, yeah, consider a market where you got price updates like once a week or something. It's a very and a slow moving, and there's not much new. So I wanted, something with more excitement, and I think crypto is pretty exciting.
Yeah, for sure. It's funny. We have parallels, and I've mentioned on the show before. Like, I started out in market research and fast moving consumer goods. So, dairy is part of that. And I
Yep.
said before in the show, like it's not fast moving consumer goods is not such a fast moving industry, ironically. So this is definitely a change of pace and more interesting. I wanted to ask specifically, like going back to that kid, right, during the COVID period, still in college, having two jobs, and now head of data at Dragonfly, about 4 years into this industry. How have your views changed on the market, the industry, and crypto in general?
Well, when I started, I didn't really know what I was doing. So that's
Same man.
that's that's a change. I feel like I'm a little more aware of where I'm at. And I originally started with my pseudonym Hill Dobby because I wasn't necessarily confident in my stuff, and I didn't want to put my full name behind it. And that way, I could always, if I say things that are completely irrelevant or everyone thinks I'm dumb, I can always wipe out what I'm doing. But there's also this process. If you look at people joining Dune, you don't know what you're doing at first, but it's just by doing it that you eventually get into get into the thing and actually understand how the protocols work, how the EVM works, how different VMs work, and you actually need that process of at first not necessarily being all that competent, because that's how you acquire those skills. There's not much course that you're going to follow to learn blockchain data that is going to be the end all be all. But yeah, I learned by doing it over time, so I'm a lot more confident in my ability, if that's what you're asking. And I actually know, now if I want to analyze some things, I know what the process is. I know where to start, and I know, I know the step by step that I need to take. And I wish this process wasn't as hard and we could have more analysts joining, because we lack a lot of analysts, I think, in crypto, especially in this world where data is essentially accessible to all. It's a dream to analysts, but it's not as easy to get in as it should be.
Why might that be? Is it the languages? Is it all the different blockchains? And I heard Solana is, for example, particularly a nightmare working with Solana data.
Yep.
It might have gotten better over the years. I'm not sure. What's the why don't we have more analysts in this space?
Because I think it looks scary. It seems like there's
Mhm.
a bunch of people that are really the omniscient people, know it all, and from the external point of view, I think it may be a bit intimidating because you don't necessarily know all that much, but you only learn by doing it. So it's a bit of a you need to take the leap, and I think within 3 months you'll actually know a lot better about what you're doing, what you can do here, what sectors are interesting to you, what type of analyst you are. It could be actually using other people's data and driving conclusion from this. It could be more of a data engineering job of putting the data together. So there's various facets to this. You could also focus. I chose to work at Dragonfly because it also allows me to jump around to different sectors that I find interesting. If I were to have joined a company, I would be stuck within that said sector. Um, and yeah, I think if you do that, you can go a lot deeper into that sector. I tend to be high level on many sectors, but you'll find people who are like Danning is, for example, someone who worked at Flashbots and is really, really good on MEV data. I know a bit about MEV data. I've worked on it, but I'm
Yeah,
definitely not as deep as she is.
that makes sense. Yeah, you're already touching a little bit on what we're going to talk about a little bit in just a minute. We're going to get into some of your dashboards, and one of them is on MEV, indeed. Also,
Hmm.
Blobs, ETH staking. Um, Before we get there, though, I do. I'm still curious about a few things from your perspective, working at a VC. Um,
Go ahead.
One is, yeah, I think, okay, the most interesting one I think is, you touched on just now that there are a lot of misconceptions around, well, a lot of parts of the industry and venture capital as well. One of the things that VCs, but also KOLs and projects got a lot of heat for was what was called the low float, high FTV meta, right?
Hmm.
So yeah, we saw that a lot this particular cycle. Um, yeah, I guess the question is like, what's the reason for the popularity of that meta? Why did we see so many projects launching with a model like that
Uh,
or
it's a
structure?
it's a good question. I'm not necessarily the most knowledgeable on this, but I it just happens to be the the way things have worked the best so far for companies that have raised through venture capital. Um, and I'm actually looking at I'm currently working on a research piece where I look at the impact of token unlocks on price of tokens, and seeing if different unlock patterns can, be affect the price a little less, which would essentially try to determine what would be the best unlock pattern. Is it linear over, a lot of years? Is it all at once? Like, what's going to be the best one? And it's really hard actually to determine, but I'm still working on it. So I'll have a better answer for you later on, and hopefully, uh, it makes high FTV low float look good, but I don't think so. But yeah, I currently don't have all that much answers for you now. But I
That's fair.
hope to. I'll follow you up with the research piece once it's out.
I guess we'll have to have you back at that point. I'm assuming this won't be like something on Dune or something like that. This sounds like something different.
I am using Dune for the data, but it's gonna be Dune plus, I mean, article and stuff, and conclusion. So it's not just data engineering. That's one side of it.
Interesting. Well, yeah. Earlier you mentioned you do mostly data engineering, but this is definitely sitting more on the insight side as well. Like, okay, what does this actually mean? What for projects and how should they launch? Things of that nature. Okay. Well, okay, we'll have you back and then we'll follow up on this one.
Okay,
Um,
cool.
how do you think about like how do you look at the current cycle and is like in what ways is it different to you than prior cycles? If you can even compare, because like we said, this is basically like still kind of like your first cycle. You came in 2020.
It's first cycle where I'm actively working in the industry, but I was on the sideline, invested personally, but I was already following the market and trying to understand what this was all about. I even did an internship back in 2019 at a company called Kaiko, which is a market data provider for central exchange data and
Yeah.
at a trade level and order book data. And that's where I understood that maybe this was more than just sending tokens around, and that's what got me a little hooked, and had this in the back of my mind during my masters, which I then dropped out of. But anyways, I forgot the question.
The question was like, okay, like going back to that time, right? And the cycle we were in back then
Oh yeah, okay.
and the cycle we got going on right now. Like, how does it compare to you in your eyes?
I think it's very, very different. If you look early on, the cycles were overwhelmingly dictated by Bitcoin halvings, because there were very, very high impacts. And that impact is diminishing over the years, of course, because it's, halvings. and and also the rest of crypto is also growing at the same time. And I think we're getting to a point where cycles across the crypto industry are decoupling, and you're going to have cycles for different things not necessarily happening at the same time.
Mm,
um, and you can solve this with the Solana cycle. I would say I would call it over the past few years, month.
yep.
Um, and now you have like let's call it a dat cycle. I don't know. It's a lot more. The market is maturing and there's more going on, so it's a lot less predictable like it was when it was mostly based on the halvings. Um, and I think it's getting interesting. I think it's a really good evolution.
Yeah, that's an interesting notion actually about okay, it's not just one market. We're having sort of like mini or sub markets within the wider industry going on, and they might perform very differently from each other.
Yeah,
Um, that's an interesting observation.
because
Do you,
you had DeFi summer, NFT summer, like those were a thing where the rest of the market didn't necessarily follow those trends, right? So
yeah,
you already had these signs of maturing a few years ago, and now that more and more sectors mature, each of those have their time to shine,
yeah.
and they'll come back and they'll have their own cycle. I'm sure we'll have stable coin cycles, and we'll have other DeFi summers, or I don't know. We'll have things that happen within these sectors and not necessarily correlating to the rest of the market.
The DeFi
Well,
renaissance. That's what we're waiting for.
there we go.
Of course, there's also, of course, a lot of macro impact, and that will remain the case. Where the industry is heavily impacted, especially by policies in the US and other major uh, other major places. So that's not going to change. But I think if you look within the sector itself, within the crypto industry, here you see decoupling.
That makes sense. And you already mentioned DATs and
Mm-hmm.
ETFs is another one that's kind of similar in the regard that is bringing in these institutional players. Do you think that's also like that's a distinct thing about this cycle? I think as well. Like, what do you think is the impact of these? Will we experience less volatility, like similar to because of the continuous happenings? Um, might this be another stabilizing force?
Well, I think institutions coming to crypto in general is really good, right? We There's both the vehicles to do this, which is decentralized asset treasuries as well as ETFs, but there's also the policy that makes those possible that have changed in the recent weeks, and it all comes together into, of course, well, the ETFs have been live for over a year for both now, I think.
Yeah.
And I've been tracking those, trying to trace them on chain. I think what you'll see is a lot of reportings are going to look at reported numbers, but I'm trying to actually look and find all the addresses where those are stored. So this has been a little, game of mine of every few days I go back and track all the new wallets where BlackRock is storing their Bitcoins and Ethereums. Um, and yeah, so I'm tracking this closely, and I'm trying to do the same for decentralized asset treasuries. If you look currently, there's a lot of websites reporting on just reporting on reportings and
Yeah.
just showcasing numbers that were put out. But I actually want to go deeper, especially because I think that for now it's fairly simple to track just an asset. But as time goes, both ETFs will eventually stake, and that'll get more complex in terms of tracking. So I think I'll be better positioned to track those when that's happen. And for that, it's going to be, I think, even more complex because you're going to have those use Aave and all kinds of protocols on chain, and therefore tracking is going to be a lot more complex than just following some quarterly reports. And ideally, we can follow much better by looking at the blockchain.
Well, we're counting on you to provide us with that data and yeah, that on chain those on chain metrics. Um, let's actually get into that a little bit. A little bit of a change of pace. Let's start getting into some of your dashboards. I know Darren prepared some questions. Um, yeah, Darren, over to you. Like, how do you want to start things off? Or maybe
Yeah.
maybe you have a starting point for us.
Yeah. I mean, if there's a area you want to start, Hildovi, the man who built the beautiful dashboards, I can't I'm not gonna force you to go in the direction I want.
I'm fine with anything. I can talk on any of my dashboards with well, I mean, I know what I did there, so hopefully.
One?
Huh?
Sorry?
The
Sorry?
one we're just talking about right now was actually interesting.
The MEV or ETFs?
ETFs?
Yep. Let's
Yeah.
go with the ETFs first course. ETFs as the entrees.
Should I share my screen?
Yeah, please.
Okay.
It's interesting because there's a lot of question I heard before about, where actually is Michael Saylor's Bitcoin, and it's like one of these sort of tinfoil hat moments, right? Where you can easily get so worried to think, do these institutions actually have the coins that they say they do? Or is it all
Yeah.
paper, or is it an IOU to own? So yeah, that's interesting either way.
I think for ETFs, they are regulated, of course, and the SEC obviously makes sure that they have the AUM backing the ETFs that they put out. But I do hope for a future where we're able to look at proof of addresses and proof of funds rather than relying on a centralized entity, regardless of who of what country. I think everyone would benefit if we could just rely on code and having the issuers just publish the and prove the set of addresses where those are held. I feel like that's a win-win. But we're very, very far from that happening. Institutions are coming on board, but they're not necessarily fully grasping the tech and not necessarily yet adapting fully to it. And yeah, but that's an evolution I really want to see in the coming years. If you look at both Bitcoin ETFs and Ethereum ETFs, wait, okay, here. You only have two that have shared those things. So Arc and 21 Share has an Oracle live on Chainlink, which is actually backed by an API. So it's not necessarily, a proof itself, but it is a way to check how much is currently held. And Bitwise has shared a list of addresses that anyone can go and find on their website somewhere, and it should be I don't know, somewhere on here. And I do think that's a really cool step in the right direction from Bitwise, which is a bit of a more crypto native issuer.
Mm-hmm.
And have there been any irregularities? Has there been anything that smells a bit fishy?
No. That would be. I think that would be insane for issuers regulated by the SEC. That would be. I don't think that happens in the past few years. The one big difference though is that the SEC asks for issuers to settle their trades with T+1. So that means that you will see the funds moving within 1 day of them actually sharing that they've had these much net buys or these much net outflows. And I also do think that crypto is perfectly poised for reducing that T+1 to just T+0, or however you call it.
Is it
Having
in-kind redemptions? Is it, or is that different where they can directly redeem the shares in their ETF into the Bitcoin that corresponds? So I know I've read a lot about that.
I just mean in general the like net flows, inflows and outflows.
Okay.
That's all they're going to settle on the blockchain. And as part of this, as part of outflows, you're going to have in-kind redemptions. But I do think that for on-chain settlement, we could have something where, at the end of the Wall Street day, we have all things are settled then rather than the next day.
Mm-hmm.
Yeah, but it is T+1 because in TradFi that's just how it works, and it's just much easier for everyone, and it's not as easy to settle as instantly. But crypto allows for a better system.
Well, yeah. I mean, there's been so much positive news coming out from the new SEC chair. You know, I know there was that recent meme of putting the GDP and some of these other numbers on all these different blockchains, polluting our
GDP
block
is on chain.
space. Like,
Oh.
hardfire, guys. Like, god damn it. Like, we fight for our blockchains for all these years, and they come and they fill it with crap like that. I mean, but the use is still incredible, you know, to see that how, you know, the finality of things and how, you know, it can just be uploaded without any problems at all. It does really speak volumes for blockchain. And I was thinking this the other night. In the first cycle, well, not the first cycle, but 2019 to 2021, I feel like all the things people thought was going to happen that cycle, a lot of them are happening now, right? And like people thought things like decentralized exchanges were going to come and eat the lunch of centralized exchanges. And we're starting to see more behaviors like that now. You know, the core concept of a real world asset, of, you know, bringing these two different assets on chain. Everyone thought that Do Kwon's mirror with the mirror as part of the Luna protocol was going to do it, but instead they just got sued to oblivion by the SEC. And I think in a way, like, a lot of these things just take time, you know, old men in suits to decide legislation and have their long lunches to pick out these rules, whilst the younger guys who are speculating on all of these things, you know, just saying, why hasn't this happened yet? Why hasn't this happened? And then CT goes on to trade themselves into a doom spiral. And then by the time these things actually come, people have just completely forgotten the enthusiasm they had for it months and, well, years ago even. And that's, you know, I think the same thing will happen in another 4 years and another 4 years after that. And yeah, sorry, I went off on a rant there.
I agree. I think it's also because we're looking at blockchains at what they'll be capable of tomorrow, and we are at the end limited by, you know, the throughput, the latency that they allow, and in order for dexes to compete with centralized exchanges, you need very low latency to be, you know, like, else, like if it settles in more time than on Binance, why would I go and use that? Like, it's just not necessarily a good strategy. It's not you're not going to have the edge. But now we're seeing much more competitive alternatives, like Hyperliquid for perps, and, you know, it's those things are finally emerging, but they've taken a few months for the tech to be even ready, essentially. So yeah, it is. I think it is cool to be watching this evolution and being part of the industry while that takes place.
Mm-hmm. Yeah, and speaking of scaling, I think we can segue nicely into Blobs and the beautiful Blobs dashboard that you prepared. Well, not before the show, obviously, but you know, we had a famous show in the UK, Blue Peter, where they'd always say, and here's one I prepared earlier, and it would be like a big sort of stupid thing that kids would enjoy, but now it's June dashboards instead. So, yeah, I mean, the Blobs have been a real sort of slept on in some ways. They've, you know, allowed for a lot of advancements to be seen in amongst the layer 2 ecosystems. And I guess it's sort of, you know, really enabling Ethereum to be that sort of settlement layer. And do you think that as the Blobs carry on to develop, is it going to set up that everyone will just be transacting on layer 2s in the future, and the ETH mainnet is purely there as just like this sort of base layer to secure everything in place? Or do you see Blobs moving on in a different way?
It's a tough question. I don't think anyone has a complete answer to this, because the Ethereum is trying to scale both the blob throughput and the L1 throughput. What I do currently see as likely is that Ethereum will be the layer where essentially, you know, RWAs and stuff is stored. But if you want to actually transact and, you know, exchange stable coins as if we were replacing Visa with those, you're going to need maybe a blockchain that is allowing for higher throughput and maybe even customized to that need. And that would be more likely to be as an L2, or currently we're seeing also many alternate L1s trying to do this, like Tempo and others. But for now, we are really seeing that Ethereum is where funds that want to keep their holdings. They want to tokenize as long as it's not made for to be traded at a high pace. And if it is, you can always bridge parts of this onto other chains and use it there. But you also have, on Ethereum, you have protocols like Aave and stuff that aren't as permanently established on other chains. And therefore, if you do want to make your money work, Ethereum currently remains the best place for this. Um, it's tough to say where we go from here. Blobs are also just one part of layer twos. Those would be, the I don't know, let's call it Ethereum aligned layer twos. Even I don't know. The rest also aligned, I guess, but it's whatever. They're maybe more aligned because they use the official DA layer, which also includes other benefits. But I also want to eventually look at Celestia, Avail, and Eigenlayer and compare those. But it's very different pieces of data, and for now the rest isn't as mature as Blobs are. So we currently so Blobs launched in March 2024 with a throughput of 3 blobs per block, and we reached that in November 2024. And for a while that was, we were essentially at congestion until May, where we doubled the throughput to 6, and we just reached yesterday 5. I can't. There's too many bars, but I can't get the exact yesterday. But the latest one is essentially above 5 out of 6. So we are nearing congestion again, and the goal is to scale this over time and with other upcoming Ethereum upgrades. And for now, if you look at who is actually using those blobs, well, you'll find that, of course, Base, as you may know, is the dominant user with 40%. I don't know if you're aware, World Chain has been growing steadily in terms of blobs market share and represents a high, quite a high share, which is interesting because I actually know very little about that chain and what happens other than the eyeball thing.
Eyeball scans. That's all I know too.
Yeah, exactly. So I know there's mini apps, but I haven't looked too deep into those. I need to look into those essentially. And then if my screen stops bugging out, no. Sorry. Then you got Arbitrum, and then Scroll and Optimism, and then all those make up like 75% of blobs, and the rest is a lot of tail end chains, which there are many of. And I think the bigger ones are going to stay around, but some of the tail ones are going to eventually, they don't necessarily make sense as a business in the end. If you have no throughput but have to pay for settlement and all this, it's just it's not necessarily viable. So yeah, I think we'll have an evolution where we see a lot of maybe new layer twos pop up, but also a lot of them die because they suffer from low usage and lack of originality in what the blockchain allows. There's a lot of like generalized L2s. It's most of them are got like here. It's almost all generalized L2s and with not necessarily big differentiators between one another. So I do hope to see more specializations, just like we're seeing like with the recent stablecoin blockchains that have been announced from a bunch of parties.
I always joked that there's almost in some ways more layer twos than actual users, and like I remember when like Arb and Optimism first both came out, and it was like such a buzz around them. It's like Ethereum but cheaper to use, and all of these things. And like, I mean, I'm hoping that with Blobs and the like, and as these things scale more and more, we will get one of these big breakout consumer apps. But can you see that? Could you see that as these things scale more and more, do you think some of these layer twos will actually lose a lot of their? Because I'm right in saying a lot of them, they don't make money, but they earn fees through the sequencer. So if it becomes more and more and more efficient, and essentially fees get less and less and less, will a
Yeah.
lot of these layer twos simply go into irrelevance simply because they became too efficient? Or is that a bit of a reach there?
Well, I think it's the numbers law is going to be that, it's like if you lower fees, is it a bad thing, or do you actually want to scale by the numbers rather than necessarily the individual payments? And I do think that's probably the end game, is having super low fees, but at scale they make a lot of volume. Well, at least that's the end game I want to see, because that's the end game where everyone wins. And if you look at Solana, that's essentially what's happening. And if you look also at like even Ethereum, fees have been driven to, high gas fees for now aren't really a thing that's being thought about. But if you look back 3-4 years ago,
Oof,
NFT summer, like it was insane, the gas fees you could get there. You could
painful.
pay. I remember the um, other side mints from the the Bored Ape team,
Yep.
which brought fees for like half a day to over an ETH for any transaction. That's insane. So hopefully we don't have much repeat of this. If we do, it's both a sign that there's actually a lot of demand for blockchain space, but it's also a sign that we should scale more. So it's two-sided argument, I guess. So yeah, but I want to see high fees be a thing of the past going forward, hopefully. And we're headed into an abundance of chains, so that's likely what I think will happen.
It's just so many chains. It's hard to keep up these days. Consumer chains, stable chains. Even there was, I think, was it Avail or one of these others that marketed themselves as the chain of chains? And it's like they're just running out of things to call themselves now, or like it's going to be like the blockchain of chains of chains of chains of chains. So it's
Just want to caveat that we are investors in Avail.
yeah. Okay. Let's delete that part. Sorry.
No, I'm
Yeah.
just kidding. No worries. You can say whatever. That's your opinion.
No, I just found it funny when I first read about them, and it was like, we are the chain of chains. I just thought it was like a funny thing that, like originally it was like a blockchain has all this stuff on it, and now something could be a blockchain of blockchains. And it's just reminds me of like some of the, in like The Big Short, the CDO, and it's like we're this thing packaged up into another thing, packaged up into another thing. But I'm just talking crap now. Ignore me. Sorry. And
I think it's you should compare Avail to Celestia and Eigen. I never know which layer or cloud. I never know which
Eigenlayer.
Yeah, but I know, but they're segmenting names for the whatever. Eigen DA is what I was getting at. And you have to compare those across one another, and then you have slightly, well, it is adjacent but slightly different is Ethereum Blobs, because it's not just a DA layer. And I think it's interesting, the evolution there, and having enabling for higher DA throughput is a huge unlock going forward. So I'm really looking forward to seeing what chains that don't necessarily use Ethereum Blobs, because Ethereum Blobs are they're putting a limit on yourself as well. Those alternate DA layers have much higher limits and therefore allow for much more performant blockchains. So I'm really curious to see where we go with chains using those. Yeah.
So something should eventually drive demand for a lot of the space that you see in these companies like Celestia, Avail, in the same way that we've seen with Blobs and Ethereum. Because I know if you went for the typical crypto Twitter mindset of high price means good tech, then you'd look at Celestia and think, well, what's going on there? But I remember reading their white paper and everything, and I thought it was super interesting, the points that they were making, and I was just now we're talking about it. What do you think can drive a lot of demand for the products that they have to offer there?
Well, I think there's a lapse of time between when those DA layer are available and we have changed that use a high throughput from those DA layers. So I think they, I think Eigen and Celestia and stuff had their hype earlier than they should have, but I do think they'll be back in the spotlight fairly soon with high throughput chains using those for as a and being heavy consumers of these DA layers. Of course, one I'm thinking of is Mega ETH, which we are investors in, that will be using EigenDA and is essentially is only allowed to exist by EigenDA and wouldn't be remotely possible on Ethereum blobs. And having those lower latency, high throughput, high transaction, high TPS, those allow for many things. If you want to, if you look, for example, as a simple example is if you look at Visa, how much is settled, to even consider having an alternate payment system that is based on crypto, you would need something of similar size, right? And we're yet to really get there. But I think we're on the cusp of having that. Not that I think we need like Visa is going to get fully replaced by this, but I just think these are the orders of magnitudes that scale to the world, and that applies to many things, not just payments. So we're approaching that shift where we can now do much better things, low latency, and deliver to many people in the world rather than just the crypto cabal.
Yeah, it's sort of, I guess, kind of what you're saying is like we've got all of the tools and the capabilities to be able to have these like incredible applications, products. It's just that because the crypto cabal finds these things early, oftentimes they are seen as like the first port of call of whether something is truly technological innovation or not. Whereas actually the reality with any early adopters is that some of them come early adopters because they believe in things.
Mhm.
Some come because they need to make quick money. Like not everyone that bought some of these big companies that exist now early in the days, they weren't buying Amazon because they were like, yeah, this bookshop's going to change the world, eventually send rockets into space. So I guess there's always an element probably to keep in mind when it comes to some of these tokens and really, really despicable charts, price action that you can see. And actually, like, you can read the white paper and it is like, really amazing stuff when you get to read about it. And we just need people to start using that space, I guess.
Yeah, I think it takes a while to go from concept to reality.
Yeah.
But to me, that's what has me. It is what has me excited about working in this space. If you look back a few years ago, crypto was still largely seen as a as just a bubble that wouldn't go anywhere by many outside the industry. And people are slowly and surely warming up to the idea that maybe there's a lot more substance to it. The institutions coming on board lately surely helps there, but until your average non-crypto participant uses it, whether he knows it or not, on his phone, I think we still have work to do, because eventually I'm sure we'll all use crypto in some way, shape, or form, whether we are aware, whether it's just on the back end of apps we use, because it just allows for just better things. You could look at prediction market is a really good example where it just allows for more than what is currently traditionally available. And there's many such examples. Stablecoin is another very obvious one.
Yeah, fully agreed. And keeping with that with that theme, right? Institutions coming, mass adoption, mainstream adoption. Um, I'm curious about specific things that you guys, Dragonfly, you've been, I think, around since 2018, if I'm correct. Um, Definitely, when I speak of firms or institutions in the industry, and I mention crypto native ones versus more TradFi ones,
Mm-hmm.
Dragonfly is one shining example that I always name. So you guys been around here. Now we got all these new players coming in from TradFi. Maybe you could call them crypto curious, or maybe they're a bit of a hybrid. Maybe like a Van Eck who has like a crypto desk, who we had on as well. And those guys definitely know their stuff. But basically, my question is, how is this gonna this new influx of these new players? How's that gonna shift the VC landscape in crypto specifically, and how's that gonna impact crypto native firms, if we want to call it that, going forward?
Uh, I think crypto native originally meant you're essentially exclusively looking at crypto, whereas now it's much more of a spectrum, and crypto can be a part of this rather than necessarily the whole business. Robinhood, I guess, is a decent example. Um, so it is, a sign of the market maturing, and of course, non-crypto native firms are also looking more and more at crypto stuff. But you also have, not necessarily in terms of venture money, but in terms of companies. If you look at the way the way I see like the internet bubble kind of happened, what came out is mostly internet native companies that shined. If you look at Google, if you look at Amazon, if you
Interesting.
look at Microsoft, they're not necessarily companies that were established previously. Now the difference is that now you have a lot of companies and apps and whatever that have high distribution and can therefore you know um,
Yeah.
implement crypto and tap into that distribution channel.
Yeah.
Um, but I'll be interested to see what is the looking back in let's say 20 years at least, what companies came out on top and made the best of what crypto is. This is going to be crypto native teams that were born because they actually used the tech early on and understood it super thoroughly and therefore were able to tune it to the exact things that it is capable of? Or is it going to be the established companies that are huge, have the distribution, but maybe are not as well tuned and as well risk averse to quickly, use the tech for what it is? And yeah, I don't know. I think it'll be interesting to look back uh, in when we actually have a more established sector.
Yeah, for sure. That is an interesting analogy. And yeah, it is true. Those are the ones that came out on top for that specific tech or era, if you want to call it that.
Yeah.
It is interesting. I do see for now that a lot of these it's also it's many things at once probably, but what I'm seeing is, well, we call it market maturation, but also like a growing professionalism in the space, I notice. And I, I
Yes.
I think that's partly because these like very suited up guys are coming in, and they're kind of, yeah, like there's like a cross pollination, if you will. Like you see them doing things in a certain similar way that people in this industry might learn from and kind of emulate. It's partly also probably like people in this industry are just like literally getting older in their years and therefore growing up, and
Yes.
maybe they want to go about things a little bit differently than when they were like speculating on NFTs and things like that. But it's definitely an interesting shift going on.
If you I don't know when you guys did your first conference or things like that, or you actually
Yeah.
met a lot of crypto people. But for me, it was in 2022 at ETH Amsterdam, and I was
Good.
originally yeah, exactly. That's what I thought, but I wasn't sure. Um, I was originally intimidated by those people I saw online because I didn't necessarily know who they were, and my impression was that, oh, they must be much older, much more established and stuff. And then you go to conference and you realize everyone's your age, and it's not really and you're not necessarily much younger or anything. uh, and that's also something that's pretty cool, I think, in this industry, to have a very young industry where um, you meet a lot of really cool people who are very like-minded.
It was actually one of the things that made me go like, oh, I could see myself here. I
Yeah,
could see
exactly.
this
Yeah.
industry. Yeah. This is young. This is vibrant. This is exciting. There's a buzzing energy to it. Uh, of course, it was also good times back then. Although, like the bear market had kind of like started. It was April 22, I think, for me. Um,
Hmm.
but
Something like that. Yeah.
It's good
Yeah,
for the
but that
stock.
and to add on that point, like if I go to conferences now, um, it's definitely, I mean, some more than others. For example, you go to a consensus in Hong Kong, and like everyone's suited up.
Yes.
It's
That's it's also specific to dev
calm.
conferences, of course, and you're gonna have
Yeah,
more VC focused conferences. Let's call it that. Yeah, and I tend to be more interested in the dev one, because that's where, even though I'm part of a VC, that's where most of my work is actually
sure.
the thorough understanding of the blockchain and trying to make sense of it.
Yeah, for sure, man. Yeah, that makes a lot of sense. Going back to your work specifically, you already mentioned you're working on some reports. Maybe new dashboards are coming out. What can we expect from Hill Dobby and from Dragonfly in the near future?
So I don't know how near, but I'm working on I'm always working on a couple of projects at once, and you always have blockers at various stages for each of them. And whenever I have that, I switch to the other one and vice versa. So what I'm currently working on is, I think, one big piece of the puzzle that we don't have much data on is interoperability, and how much, like, who's using what bridge for what are the settlement times, what are the settlement costs. um, Native bridges also tell you a lot of information in terms of layer twos, and how much TVL they have there from the get-go. There's a lot of things here, and I think it's also um, it fits into other parts of my work. A lot of my work is tagging and sleuthing for different addresses, whether that's staking entities, trying to see who that is, or another recent piece of work I did is on centralized exchanges and trying to get the list of addresses where these are storing their cryptos. And bridges is a piece of the puzzle that's heavily necessary for sleuthing, and I need to know, okay, if this guy used bridged here, like, where is he actually going and on what chain? And right now I'm in the data engineering phase of calling creating like bridges.flows on Dune, let's call it that, with trying to get as complete of a picture. And depending on how that goes, I'll either be presenting this at DuneCon, or something on DATS and stablecoin. So yeah, I think that's where I'll share my next big piece, hopefully.
Very exciting. All right, DoomCon during DEF CON, I believe.
Yes, in Buenos Aires in
Awesome.
November.
All right, so people should find you at DoomCon in DEF CON, at
Yes,
DoomCon
sir.
at DEF CON in Buenos Aires. Where
Yes,
else
sir.
can they find your work, and else can they find Dragonfly best?
Well, Dragonfly, you can always reach out to us if you're looking for investment, and you can reach to us on all our socials. But also, um, for me, you can find me on Twitter, where I'll post things that I think are currently relevant, and otherwise, you can also find me on Dune under the the username Hildobby, where I post all those dashboards and try to keep them up to date as much as I can, and post some new ones that I feel are relevant and for data pieces that are currently undersurfaced.
Still top of the leaderboard?
No, I am not. I was. There's two other that took over. Crypto Koyo. I don't know if you know that guy.
Of course.
And another one I think is currently number one, and it's an account that farmed for some airdrop for Bear Chain, and one of the farming process was getting stars on Dune. So yeah.
That always works. Follow the trend. Yeah, but you're always up there, always going neck and neck with a couple other guys. So good stuff. All right, man. Awesome to have you on. It was an interesting conversation for sure.
Well, thanks a lot for having me. That was awesome.
Yeah, finally. It was good to have you on, man. Yeah, also, I want to thank everyone for tuning in. It's always a pleasure to have you with us. If you enjoyed this, you can access more insights in the following ways. For in-depth reports, many of them publicly accessible, you can join our research platform. For protocol and market summaries and highlights, you can subscribe to our newsletter. And for daily news updates, you can join our Telegram channel. All the links are in the bio. And of course, you can tune in next time. We're live every Thursday, 10 a.m. Eastern Time on X and YouTube. This was Market Cap, where funds and firms provide their insight on their activities, sector, and the markets at large to you, our audience of institutional investors and traders, as well as industry professionals. See you on the next Market Cap.